Welcome back to the channel. This is Joe Tax Trader, and I have been on the move for about 2 weeks. Went from Costa Rica to Philly to New York, and honestly had a blast. Ate a lot of good food, met some good people, but it feels good to be back into the lab, making these videos, helping you all out with the free content, so you can save tens of thousands of dollars on the taxes. So who I am, if you don't already know, I help out all the profitable traders save thousands of dollars on the tax bill every single year. And for the unprofitable ones that clicked on the video and you're like, why am I here? You will be here one day. Don't know when that day is, but you will be here. And when you get here, you'll have all the information you need to where we could work together and hit the ground running. So actually, it's mutual beneficial because you get this information to help you save money, and it makes it super easy for me to work with you and help you out because you'll know exactly what I'm talking about whenever we do work together. So make sure you follow me on Instagram, TikTok at Joe Tax Trader. That's where you get a whole bunch of free information. You can join up on the Discord, where the link will be in the description. So in today's video, we will be talking about the S-Corps. Last week was, or the first video in the series was bookkeeping. And this series is treating trading like a business. So what is an S-Corp? It is a tax election. It's not a type of entity. So LLCs, S-Corps, LLCs and corporations, those are the two main structures you'll hear about. And those two those two structures or those two entities can elect to become an S corp or taxed as an S corp. So the S corp will act as a pass-through entity. You'll make the money, and then it'll flow into your 1040, which is your individual tax return, and you'll get taxed on as a K1 distribution on all the money that gets flowed to that 1040. Now, there's a different part of the S corp, and that is the salary. You have to take a fair and reasonable salary if you elect as an S corp. So, let's say you make $1 million and then you take a 250K salary. That 250K salary is going to get taxed at seven. Let's just call it 7%, as opposed to the 15.3% self-employment tax if you weren't an S corp. So off rip, you save a whole bunch of money by having the S corp. And of course, there's different ways and different structures you can set up that can save you even more money, but that'll be the next stepping stone for a lot of people. And most people are probably going to stay on the S corp level unless you're just insane and start renting the prop firms and just going crazy with the trading. And then we'll have to get a little bit more creative to lower the tax bill. So the the main thing I want to talk about with bookkeeping as far as S corps is bookkeeping. I emphasized the importance of it in the last video, but if you don't have the bookkeeping, you won't know when it's appropriate to elect as the S corp, because whenever you do become an S corp, although it saves you a whole bunch of money in taxes, it also costs some money to become one, because you have to pay for payroll expenses, you have to pay for accounting services, and there's a couple other things that fall in line with that, but the main thing is it costs money to save money, so the S corp with the bookkeeping will, damn. So the next thing I want to talk about is the bookkeeping. I touched on that last week or in the first lesson in this series, but bookkeeping is going to be your saving grace whether you're an S corp or not. If you're running a business, you need bookkeeping because you need to know what your numbers are to help you make better business decisions. You also need to be able to justify the deductions you're taking off if you ever do get audited, and that's exactly what bookkeeping is for. Now, another thing bookkeeping is going to show you is when it's appropriate for you to elect the S corp. The S corp isn't for everybody. You have to be making a certain amount for it to make financial sense for you to go from being an LLC or an Inc. and transition to the S corp, because when you become the S corp, there are expenses that will pop up out of thin air. So there's payroll expenses. You'll most likely see why people hire an accountant to help them out determine what the fair and reasonable salary is and keep them compliant, and all those things cost money. So you don't want to be barely making $3,000-4,000 a month and then go into the S corp. it'll be a little bit more comfortable if you push in 7 to 8K profit every month, and then looking into the S-Corp, because at that point it makes a lot more sense to where you can save on taxes and you could afford whatever bill that most people will charge you to keep everything up and running. And then now most of your energy is on making the actual money as opposed to running salary every week or every 2 weeks, then determining when to adjust the salary and trying to forecast how much you'll owe come next tax season or even during quarterly taxes. It's just a lot easier having somebody tell you, hey, look, pay this much at this date and you're good. So say all that to say, bookkeeping will tell you, all right, look, you're ready, you're making enough money, you could do the S corp. This is when it'll make the most financial sense for you to do so. So the next thing I want to talk about. So the next thing I want to talk about is the compliance aspect of the S corps. It's not too many rules with the S corp as far as staying in compliance, but you need to be able to take a salary because the main perk of the S corp is getting around the 15.3 self-employment tax. But because you get around that, you have to pay the 7% payroll tax. So let's say you have 100K that you would be taxed on. If you were in an LLC, you made 100K. Let's not even talk about deductions, and you get taxed 15.3% on that 100K. You'll pay a 15K tax bill. If you are an S corp and you make 100K and you pay yourself a 20K salary, you get paid you pay taxes on 7% of that 20K. Then the rest of that money will get sent over to your 1040 with through a K1 distribution, and then you'll get taxed at an ordinary tax rate from there. And that difference right there is going to save you thousands of dollars. And obviously, you can just play with the numbers and see how huge of or how much tax savings you can save. Next thing I want to talk about is the compliance aspect of the S corp. When you become an S corp, you skip out on having to pay the 15.3% self-employment tax, and instead you pay 7% payroll tax. But you only pay the 7% payroll tax on the fair and reasonable salary you decide to take. So instead of you paying $15,000 in tax on 100K in profit as an LLC, once you're in the S corp and you decide to pay yourself 20K salary when you made 100K profit, you now pay 7% on 20K as opposed to 15% on 100K. Then the rest of the money that you don't pay yourself a salary will be a K1 distribution to your 1040, which is your individual tax return, and you'll just get taxed at your ordinary tax rate on that money. So that difference in tax bills is going to save you a lot, especially the more you make. But that's one of the main things. There's also filing deadlines. You need to have certain forms, 941 forms, that show when you run payroll that you're paying taxes, and it kind of allows you to skip out on having to pay or worry about quarterly taxes, because if you're paying taxes in every single paycheck, you can technically be paying into the system and you'll never have any type of quarterly tax penalties, anything like that. So to wrap this video up, there's a couple things that will happen that let you know you're an S corp in the first place, because you can't just say, "Oh, I want to be an S corp." It's not necessarily how it works. You have to file a form 2553, and it has to be filled out a certain way or it will get rejected. And then the IRS will accept it. They'll say, as of this day, you are treated as an S corp, and then that letter right there will save you all the money that you need. Because if you're an LLC, you get to skip out on the 15.3 self-employment tax, and if you're an Inc., you get to skip out on the double taxation. The Inc.'s double tax is just, let's just say, 20% corporate tax, and then once you take money out of the corporation, you get hit with another tax of whatever your ordinary tax rate is. So you get hit with taxes twice. But both the Inc. and the LLC can file for the S corp election, skip out on the double tax or the self-employment tax, and then they get to pay the 7% payroll tax on the fair and reasonable salary that they chose. So if you don't have that piece of paper, none of this happens. So hopefully you found a lot of value in this video. I'm gonna keep these videos rolling, and you already know how the algorithm works. So make sure you go like, comment, subscribe, help the page grow. If anything I said sounded like word salad or confused you, you can join up on the Discord, comment or DM me on any TikTok or Instagram, and I'll be able to help you out, because once you get profitable and you need my help, it'll be a lot easier to just be able to tell you what to do as opposed to teach you and tell you what to do. It'll make everybody's life easier. So please ask questions.